Testing, testing, 1, 2, 3, testing, 1, 2, 3. The rain in Spain falls lately on the ground. All right.
Hello, 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 hello. Dude, yeah. How'd that happen? Yeah, well, I'm logged in twice. So if that becomes a problem, then we'll figure that out. Great. But you can hear me. Yeah, I've been trying to set this webinar up for about a half an hour. Good use of my time. Love it. And I think I'm looking at the other Wayne's. The other Wayne's desktop. Cool. So how are you doing? You having a wonderful day? Getting ready for the ECB stuff? There we go. Where's my mouse? Okay. You are sharing my screen. So can you see my screen then or not? Okay. Let's see if I can draw on it. Because I thought maybe it's the other Wayne. Can you see that? Can you see a drawing? All right. Well, I'm good with that. Very little working today. Maybe we'll see what the ECB is going to do. So why don't I start? We got about 3.5 minutes. I bet you now it's gone is what you're going to tell me. All right. You know, I don't know. It seems to be Flash related, and I've updated everything times, and all that kind of stuff. All right. Well, I just have to click start, so let's get that going. I think you have desktop. All right. So, anyways, good morning. Life can be frustrating sometimes. Hopefully, today plays out better than it started. The ECB is about to announce their any changes in central banking policy. You got to get going. So welcome to forex.today. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily... Hang on. Past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay focused on the long term, and never risk money you cannot afford to lose. .com. Please visit tradersway.com immediately and open an account. Even if it's just a demo, at least you'll get to know us and the quality service that we provide. I do these sessions every day, 7:30 in the morning, Monday through Friday, except the first Friday of the month, I'm at FX Street, where I do trade non-farm payrolls live, which I've been doing for about 12 years. All right, so we got the desktop going here. Should be able to see that. And we have the ECB announcement coming out any second. They tend to be 30 seconds late because they're Europeans, they smoke cigarettes. Unchanged, unchanged, unchanged. The Euro's freaking out. Oh my gosh. Unchanged, unchanged, unchanged.
Maintaining the asset purchase target at 60 billion, so no surprises across the board.
Cool. Not a lot of reason to own it, huh? Life is great, life is grand, life is good.
can be increased in size or duration. So standard rhetoric there, following their rate decision, talking about the QE can be increased in size or duration if the outlook worsens. And that reiterate their guidance that the interest rates for longer and far beyond the time of the bond purchases, they'll maintain lower rates. The euro fractionally softer, down about 0.2 now, 108.82, just trading below the 109. So slightly softer euro post rate decision as the ECB keeps its rhetoric there.
So I don't know if you can hear all that or not, but essentially think about it this way. What does the ECB want? Oh, look at that. Now the live camera works. Hey, everybody. Good morning. It hasn't worked for 45 minutes, and all of a sudden, boom. Yeah, they want a weak euro, right? They're trying to create inflation. So here's what's happened recently. It's made its way near the psychological level of 110. And now, perhaps, is able to make its way back down. That's all. Okay, that's all. So it'll be interesting to see where the new pivots are next week. We got monthly pivots coming up soon. Is that next week? I know we're close. Yes, Sunday night, Monday morning. Yeah, new pivots. Oh, beautiful, huh? So yes, so they're trying to create inflation. They want to keep money supply large. Anyone that's taken fundamentals course knows all about money supply and its impact on inflation and rates. So in any case, they want to create inflation. The funny thing is, there really isn't much they can do at this point beyond what they're doing. I guess that's the less for longer idea that they're doing, but at least they're doing something. But much of what they require hinges on oil prices, not monetary policy. And then, of course, contrast this with the Fed. The Fed has a dual mandate to manage the U.S. economy and keep inflation in check. Those are the two things. Now, ECB, right? How do they worry about Portugal and Italy and Germany? I mean, just there's three different countries there with three different economies, with three different political systems, with three different social needs, let's say. I mean, throw in Greece, right? It's what an almost impossible thing to do, right? So anyways, good luck with that, Draghi. So anyways, right now they need a weak euro. And then at some point they would like oil prices to go up because that would also be inflationary. Okay. Okay, so euro dollar going up isn't helping the ECB. It wants it to head down now. It probably doesn't want it at 80 cents on the US dollar, but you know, it's funny when I first started trading forex, and I don't know if we could even go that far back anymore. Yeah, okay, in here. Yeah, I was trading euro in here when I first became a currency trader. And I remember when it went through parity. I remember the moment where I was sitting, what I was doing. It's kind of interesting. So with that history in mind, it can go lower, but you know, it really doesn't have to. Doesn't have to go lower, but it probably will. Hey, the CEO of Total believes oil prices are going to recover in the second half. Yeah, And the CEO of Apple believes more people are going to buy iPhones. Like, what else is he going to say, right? We're doomed. Everybody sell the stock. All right. Well, let's just do around the world. Around the world. Around the world. Look at gold hasn't done anything. Still nothing, huh? But do you see the trend? So I drew this by hand. It's not a zigzag tool. And I still think it's kind of following it, isn't it? Right? I see the roll reversal here. I see the roll reversal here. Bouncing off of the, I'm looking at euro dollar up over there. I guess I'll use my other hand. I'm looking at it here. There it is. And with a quick glance, I can see that we're bouncing at the 4-hour 21. Okay. One common question I get is, Wayne, how come you need so many charts? What's wrong with you? Well, I'm a very fragile soul and I want people to like me. And also, I can just glance over there and see, oh, look, 4-hour 21. That helps too, especially if you're a scalper too, because you could say, oh, look at that 4-hour 21, and then I'm over on this screen and I'm immediately looking for bounces and stuff, right? So, but please like me, please. Yeah, I'll show you my charts. All right, oil stuck on our support here as well. It's amazing, really. Not a lot's happened, but if you zip down into the smaller time frames, we're Oscar Mike. And why drop? Well, first of all, oil has its own concerns and its own issues and stuff. But here's one logic fundamentally. The Eurozone is nowhere near recovery, according to the ECB. Okay. Therefore, demand for oil should not be high, nor is it expected to increase out of the Eurozone. What's up, Joe? So anyways, that's sort of the short-term logic, but ultimately I believe oil traders are going to do what they want to do. Take it to the high side at 55 and then drop it down to the low side, which is how low? I mean, I don't think this is our low. Oops. I don't think 39s are low. I think, yeah, 47. So 45 to 55, I think, is just where we are. Now, remember, we are going to be shocked in July and August and September, aren't we? Oh my gosh, oil inventories are going down. This must mean something. You guys ever see The Life of Brian? Where the crowd is chasing Brian and he's running so fast from these crazy people that his sandal falls off and they're like, it's a sign! Right? A miracle! Right? Yeah, God be praised. It's a sign he wants us all to worship sandals than the sandal makers. Yeah, so anyways, I think they'll be shocked, and it'll be a sign. Oh, this is it. This is it. The oil's going to go up forever now. And you'll hear people on TV talking about $200 a barrel again. And yet we just know for the last 50 years, ex ante, and last 5 years of weirdo kind of markets. If you look at the 50 last quote unquote normal years, it normally declines that time of year just based on summer driving season. And also, I think it feels here in America, it feels like things are pretty decent. Even poor people are rich, right? And that's the beauty of America. You're poor? Oh, no problem. Right? And so I think people are going to get out this summer. They're going to drive. They're going to fly. They're going to buy, do all those things, right? Well, Ryan, we're talking about an annual cycle. So all I'm talking about is peak oil is June 1st. Right? I mean, so right? And so now you could find the trough oil too, which I didn't actually bother to do. And the reason I didn't bother to do it is it's not so much a hard date. So like summer is summer, and people go on vacation in summer. It's a human thing. Now, demand for heating oil has to do with nature. Heating oil, a derivative of crude oil, is used for heating in a large part of the northeastern United States, which is, a large percentage of the population, right? So if it's cold in Boston and New York, demand for heating oil will be significant, and therefore demand for the underlying commodity will be significant, and so on and so forth, right? But if it's a warm winter, demand for that, so that will shift, right? So there's an element of uncertainty. So, if we were talking about it strategically, right? How would you graph this? All right, so you got, oh, dang it, I don't know how many times I clicked not yellow. All right, so let's say there's a demand plane, and we'll call this zero demand and one demand, right? And peak oil is sort of a certain date, right? So we'll call that 6/1. That is certain. And then let's say trough oil, because we're splitting up the total demand over the course of the year. That has a certain amount of uncertainty. So you would plot this in a sense that demand will be lower on warm winters and higher in cold winters. And so this trough can shift. Okay. But the interesting thing is, since we know peak, the reason peak is there is it has to do with summer demand. And so somewhere around the trough, we start building inventories again in anticipation of peak. Okay. And then, so therefore, no, think about who's actually creating this. Do you believe this is the open market? What's your assumption here? Maybe this one last piece will help discern why it's a logical demand cycle. Okay, so I'm going to tell you it's not the open market. It's refiners. Who buys crude oil? When was the last time you bought crude oil? Do you have any crude oil? Have you even seen crude oil? You know, and the funny thing is, most people don't even know what color oil is. Isn't that funny? Yeah, ask somebody. You better ask somebody. Ask somebody what color oil is. What are they going to tell you? It's black. Is it? So anyways, yeah, oil refiners make products, whether it's Vaseline, whether it's gasoline, whether it's kerosene, you know, like for jet fuel, right? Whether it's oil, what kind of oil, what kind of viscosity of oil, right? Other types of lubricant, plastics, tar, all right? So they take crude and they crack it. You guys know that? Have you ever seen a big giant tower at an oil facility? You know what they do? They heat it up to extreme high temperatures, and right, and it's so hot that things start to separate. At the bottom, you'll have tar. What do you use tar for? Roads. Yeah. What's up here? Jet fuel. Right? What's here? Gasoline. Right? Down here, you have Vaseline. Here you have plastics, so on and so forth. So what you do is you run a pipe up here, and you suck out this stuff, and another pipe to here, and you suck out that stuff, and another pipe here to suck out that stuff, and so on and so forth. And now you have products that can be further refined, right? Okay. They do that and they heat it, and that's right. And that's why you see those big towers. So anyways, it's the people, the refiners that are doing this process that are demanding the crude to make products to sell to the market. And so there's going to be supply and demand cycles for that in general, right? And it's them that will affect when oil will peak and you know, and that kind of stuff. Because it's not really the supply and demand of you directly. So for example, you're like, hey man, I need a lot of something, whatever it is. You need to load up on Vaseline. Oh my gosh, Tyler Lund. Where have you been, bro? Yeah. So anyways, you know, you're shopping for boxes and boxes of Vaseline. Your demand for Vaseline is really high. Hey, look, man, I don't ask questions. But you go out there, you're like, where's all the Vaseline? I can't find any Vaseline. Well, if somebody doesn't want to make it, doesn't matter. You don't have it. So refiners can do things like shut down and go into maintenance mode. And you could be outside the gates begging refinery workers for lube for Vaseline. Come on, bro. I got $100 in cash here, man. Slip me some. But anyway, so what I'm saying is supply and demand can be, supply can fall just simply because refiners stop refining. Okay. So anyways, there's the market in a nutshell. All right, so you know, I don't have any of those yen trades open. So, but that's good. I did all right yesterday and the day before. I held them. Do you remember that pound yen trade? I hit my target. I got 222 on that, and then I think it went up about 30 pips more without me, and then collapsed about 150 pips in an hour. And I'm like, whoa. I think Aussie yen, I ended up getting out of break even on that. It never took off, but I never really expected it to take off. That was just a stupid, you know, shot in the dark at a psych level. But what else are you gonna do? I mean, it was right. I didn't have any risk since I jammed my stop. And then USD yen, I think I ended up picking up 100 pips on that. So it was like a 300 and something pip day, which is fine. Can you show the yen one again? Which one? Yeah. Oh no. Don't congrats me. It's not a big deal. Yeah. All right. So the beast, there wasn't anything specific on the beast. It was a gap play. They were they were all gap plays, so there wasn't anything, you know, heroic, right? Okay. Now that's what I should have done. What I did was I longed in. There's a psych level, I believe. I logged in here somewhere. Okay. So you know, I'll do it this way. So I bought the drop off the get. I bought the drop off the open because you know we closed here Friday. It gapped up here, and you know my logic in trading gaps is something like this. Okay, throwing a pivot, throwing a psych. There was some support, and I realized, well, it could fall further, fill the gap, and take off. You know, but a 382 psych, it's like it's not the best entry, but what are you going to do? Not trade it, right? So originally my stop was like down here or something, right below the central, and you know it fell a little bit further, so it didn't take off till Tuesday. But by Wednesday, you know, I'm taking profit at and you guys saw me. I moved my stop here yesterday. Remember? And not my stop, my take profit. And look at I hit my take profit, and then look at this. Whoa, that's 100 something pips. But I was already out. And then of course, just like anything else, now that I'm out, it's taken off again. But I don't know. But you know, I got pretty much the full Monty on that. But the other ones, you know, had the pullbacks and stuff. So I don't know. What are you gonna do? You bought early, right? Well, Peter says about early. Yeah, I guess. I mean, you know, is it early? You know, it gapped and I let it fall for 4 hours. Is that early? Yeah, maybe interpretively, right? But if let's say things had happened differently, and this is beast, man. It you know, it could have done something like this, and it almost did, right? Just as easily, and you'd say, whoa, Wayne timed it perfectly. Well, you know, I bought it at a psych level. I bought it at a 382. I bought it at a pivot point. I mean, you could call it early, you could call it late, you could call it perfect. All I did was buy its support in an uptrend. You know, I don't know. If I had known it was going to fall to the next level, you know, you know, And you know, and it's supposed to. I mean, the bottom that actually occurred is the one that's supposed to happen. Okay, it's just a gap trade. Okay. Yeah. So yeah, again, nothing special. I'm sure if you search either the forex.today YouTube channel or the Traders Way YouTube channel, you will find let's see, how to trade gaps in forex. Oh, here it is. Joseph says it's I find I get questions like this a lot, and always find it a little bit funny, but I'm a particular person, I suppose. Here's the link to that one, by the way. Does divergence mean anything on the yen pairs? Yes, it means divergence. I don't know, if you see divergence, then there's divergence. Does it mean anything? Well, I suppose it means divergence. What it means to you is the bigger question. What does that mean to you? How do you interpret that? Has your risk increased? Is it an opportunity? You know, I mean, it depends on everything. Are you a bull? Are you a bear? Are you in? Are you out? Right? Or if you're already in and it's diverging, maybe that's bad for you. So, I mean, or other people will say, does it work? Or what works best? What works better? Right? Especially when you're talking about like, hey, Wayne, what's better, RSI or stochastics? Well, they're both algorithms. They're equally work exactly correct. They measure whatever you ask them to measure. Yeah, well, but I don't know, Joseph. Okay, and also it'll mean different things to different traders, whether you're a bull or a bear. So divergence is just one thing that you'll look at. Okay. Right. So yeah. So on these yen pairs, do you see divergence? You know, and a lot of people trade divergence a lot differently than I would as well. And they're looking at all kinds, like, I don't know. I think the most important thing is support and resistance. Okay. So does that look like support to you? Okay. If it's not support, then under no conditions will you buy it. No conditions like at this level. Right now, I suppose the one condition is if it breaks above, right? But under these conditions, there's no way for you to even, you don't even think it. You don't even think about buying it. It's impossible, right? So if you see divergence that shows you weakness in price while you're at resistance, then you have an opportunity to sell it. Now, if you saw some sort of divergence that told you it was going to be bullish, well, there's no way you can buy it, right? There's just no way. Oh, but Wayne, the bullish divergence, I don't give two hoots because I'm not a bull at this price. It's impossible. Right? So that's what I mean, Joseph. So one thing I'll look at is we're at resistance and it's overbought and falling. So I could sell here, right now, right? And it should fall for 2 hours according to this chart. So that would get me probably to here, maybe a little bit lower, right? Right, kind of like maybe into there. Ultimately, what I would like to do as a bear is get down to here. So, right, that's what I'm thinking now. So again, if you saw bullish divergence, it would be irrelevant to me. Where I think amateur traders go, okay, where amateur traders tend to go wrong is they see bullish divergence and they buy because of bullish divergence. But what they don't understand is it might be a bearish market or they're at resistance. And by doing something because of what they see on a chart, let's say, without any context of a strategy, what ends up happening is they become a liquidity event to someone that does have a strategy. Okay. Okay. So now you want beast. All right. Okay. So once again, it all depends on whether you're a bull or a bear. Now, what divergence are you using? MACD, stochastic, RSI, CCI, ADX? And then you're also going to have a time frame issue, right? Okay. Now on this, I spend very little time on my oscillator. Okay. Why would I spend very little time on my oscillator? Because it's trending. Yeah, thank you. Okay. So yeah, so I don't know what oscillator you're using. On pound yen, there's bearish divergence. There's a bearish rising wedge over, and it's a pivot. Notably seen on a 4-hour chart. All right. Wow, you'd sell this, huh? Well, it's so bullish that we've blown through weekly and monthly pivot points. So all I could really tell you, because I'm not going to poo-poo on the divergence that you see, although I don't see it with my oscillator, and you see a bearish, and there's a bearish rising wedge in price. All right. I'll tell you what, I got out here because of the R2. So I'm already out. And I think that's the fairest answer. I don't see any of the other stuff. My job, I feel, for my trading is simply to identify resistance. All right. So if you believe this is a resistance level, I see there's another one a little higher. Okay. These are also other areas I'd get out. Now, are there monthly R3s up here? Most likely. Is there weekly R3s up here? Most likely. But I don't tend to trade these. this way. But also maybe going along with you, Joseph, tomorrow in the last, let's say 3 hours of trading, if we're up here, I might counter trend back down. Oh, you do 833. Yeah, no. Yeah, I don't do 833. So, but anyways, yeah, if you were selling this, see, I don't like even thinking about selling a market that's going up. So I guess that's the other thing I want to kind of say, Joseph. So you might be right, and maybe I've trained myself over the years, but I don't see the divergence. I don't see a wedge that says this is going to come down. I just don't see it, but maybe I used to. And maybe as a survival mechanism, I've lost that part of my brain. Right. That's where all my red wine goes. Look, goes to that part of the brain. Why I wash all those things away with red wine. Yeah. Um, you know, I don't see it. I don't want to see it. This is going up. This is going to go up, and it's going to go up, and I don't want to sell it. Otherwise, I'm going to do things like sell this and sell this and sell this and sell this and sell this. Instead, what I did is I bought it, walked away, and made 222 pips with my eyes closed. Right? So I'm trying to catch the trend. Now, if it heads up to one of these levels and then makes a big drop and then a lower high, right, and then or a double top, then game on. Also, my counter trend strategy relies on this being well above, weekly, monthly targets at the end of the week, month. So on a Friday afternoon, I might counter trend this just because I have a counter trend strategy that I use from time to time. And I might throw down one and risk 50 pips and see how it goes. But as a general rule, I think this is going up. So I'm a buyer, and it's going to continue going up minute by minute, hour by hour, day by day, week for week. It's going to keep going up forever and ever and ever and ever until it stops. Okay? So what I'm doing, and maybe this helps, in your analysis, if you see the divergence and you see a wedge, they should be signals, or let's say you're interpreting market conditions to be a scenario in which you should consider taking profits soon, and that you are likely to consider taking your profit at the next level of resistance. Right? But I wouldn't look at it as an opportunity short. And that's just my mindset. Now, there are probably tons of opportunities to short this, skippy scalpy and all this other stuff, but it's just, I'm just too old for that nonsense. Right? So I hope that helps. All right. So I know my answer originally was a little facetious, but it's just, I don't see it and I don't want to see it. And I'm just a well-trained pony, I suppose. Yeah. Now you say you remember October, November, they kept going up, but I told you guys on Monday or Tuesday, Monday and Tuesday probably, that I'm going to take profit because I don't believe this is going to go up forever. Right? Right? So in that case, see, if it was September or October, I would have just moved my stop. Okay? But in this case, am I going to cry now that it's higher, that I only got that much profit out of this much of a market? I guess that's the actual bottom. What percentages is this? I got this much profit. But if I had only taken the risk and stayed in longer, I would have had this much profit. All right, now let's analyze this. Okay. Okay. I can't do it. Anyways, what percentage is this? What is that? 94%? 86? Gee whiz. 82? You guys are nuts. That's 90. Come on, whatever. You know, like just should I cry? Should I have stayed in? Should I have taken the risk? Okay. I got out at the weekly R2. In my books, I'm a hero for myself, for my money. I'm a hero for my clients. I'm a hero for whatever. Because even if it goes up higher, let's say tomorrow's another bullish day and we're way up here, I'm looking at it from the point of view of like 14 years of witnessing how this market behaves, and it all averages out. And I know that you're best off always taking profit at the R2, because sometimes it goes a little higher, but that's risk. Most of the time it comes back down because that's what it's supposed to do. So if I buy a dip and rally it up for 3 days to the R2 and take profit, that is what I'm supposed to do. That's my strategy. That's what I said I would do. So anyways, hey, I got to jump, babe. I need to take off a little bit early today. I got a final examination on my game theory class. Apparently, it's going to be so difficult that the professor has allowed a cheat sheet. I'm like, what? Yeah, you're allowed to bring in one piece of paper, handwritten, and you can put anything you want on it. It's not open book, but I'm like, really? Is that bad? Ugh. Yeah, right. Very small. Yeah, wouldn't it be great to bring in like a fish? What do they call it? Fish film. Bring the whole textbook. Yeah, but you have to write it. Yeah. Thank you, TL. Hey, I hope everything's going well with you, man. Kicking butt. Tyler's a butt kicker. Yeah. Oh, Ryan, you're so funny. Professors don't go to the examinations. Oh, they don't. They don't belittle themselves with a task like that. What, sit there for 2 hours and do nothing? Professors don't do that. Oh my God. They don't, I'm telling you. Anyways, peace on earth. May the pips be with you. May your profits be above average. Let me give you the numbers. It's a miss on durable goods. Wholesale inventories is a miss. Jobless claims are higher than expected. Advanced trade balance less than expected, which I consider negative. So as far as the dollar, negative, 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 negative. Hey, look, another opportunity to make money. So peace on earth. May the pips be with you. May your profits be above average. I'll talk to you later. Oh, wait. Yeah, okay. Right. Yeah, all right. Yeah, all right. Take care. Take care, everybody. Thanks for being on my team, and thanks for being the punching bag today, Joseph. it's all in good fun and love. Right? Cheers.